Welcome back to Everything Tesla Facts, everyone. Are you curious about the true state of the world? Concerned about what could occur over the coming months or years? Check out Cathie Wood's most recent update. One of the most prominent stock research gurus of our day, she serves as the CEO and Chief Investment Officer of ARK Invest and has some rather pessimistic outlooks for the stock market. She also knows everything there is to know about economics and finance. While recession warnings have been mounting in recent weeks, the majority of them have a 1 or 2 year timeline. She claims in this captivating video that we are currently in a recession and that everyone will be afraid in the next 2 weeks. Therefore, you should obviously begin preparing yourself as soon as possible if you haven't already. Watch until the end if you want to hear what she has to say, and let's hope that her prediction is incorrect. Next, let's listen to her thoughts. But before we get started, please press the like button, subscribe, and enable notifications if you enjoy this kind of content, so you can be informed about everything that's happening with Tesla. One of the most outspoken proponents of Tesla on Wall Street is Wood, the CEO of ARK Investment Management and manager of many exchange-traded funds with an innovation focus. Tesla stock is the second most valuable holding in the ARK Innovation ETF, the fourth most valuable holding in the ARK Next Generation Internet ETF, and one of the best investments in the ARK Autonomous Technology and Robotics ETF together. The funds possess over 1.3 million Tesla shares, which are currently valued at $910 million. Wood cashed in some early profits when this stake fell from a peak of about 5.6 million shares due to the overall tech sell-off. But thanks to the latest split of Tesla's stock, ARK now holds over 1 million shares. Although the majority of investors fear that the United States will have a recession in the coming year, Cathie Wood, the founder of ARK Investment Management, thinks that one has already occurred and will end by then. "We actually think we'll be coming out of it in 2023, she said, despite the fact that many strategists and economists have been disputing the idea that we are in a recession and expect the United States to go into one the following year. Wood stated on Tuesday's Squawk Box on CNBC that we think we are in a recession. We believe that inventories are a major issue, as I have never witnessed such a significant rise in my professional life. I have 45 years of experience." Wood claims that supply chain disruptions and geopolitical threats are to blame for the higher-than-expected inflation rate. "Inflation being as sustained as it has been was one thing we were wrong on," Wood stated. "It's unbelievable that the supply chain is taking over 2 years. And naturally, we couldn't have predicted Russia's invasion of Ukraine. Although inflation has been a greater issue, it has prepared the way for deflation. We believe that we are currently experiencing a fairly significant inventory recession, but we do not anticipate that it will resemble the systemic recession and financial crisis that occurred in 2008 to 2009, she stated. It will resemble a garden variety more. From the mid-1940s to 2007, the average U.S. recession lasted 10 months, with the smallest lasting only 6 months. According to a 2008 analysis by the Federal Reserve Bank of San Francisco, the Consumer Price Index showed the fastest increase in inflation since December 1981, up 8.6% in May compared to the same month last year. According to Wood, sentiment data has fallen to all-time lows, indicating that consumers are being negatively impacted by rapid price increases. She referenced the surveys of consumers from the University of Michigan, which revealed the lowest ever reading of 50 in June. In support of his claim that innovation is recession-resistant, Wood pointed to the recent shift back toward growth stocks, which have higher growth rates than the market as a whole, which is often more impacted by the cycle. The well-known investor has had a challenging 2022. As interest rates rise, her disruptive technology darlings are among the biggest losses this year. ARK Innovation ETF, her flagship active fund, has fallen 52% so far and 66% from its 52-week peak. The fund saw a 13.2% rise in July, but this year it has lost a lot of money. The fund fell more than 5% on Tuesday, bringing its year-to-date loss to almost 49%, according to FactS data. We do see that we are in a recession based on these earnings statistics. We believe that this recession is being driven by inventory, and I believe that this is becoming evident. Advertisers are drastically cutting down, Wood stated. While Walmart and Target have cautioned that excess inventory may hurt their profitability this year, recent financial reports from Snap and Meta platforms show that advertisers have undoubtedly reduced their expenditure on those platforms in recent months. But according to Wood, her clients are largely staying with her. And as investors look for diversification in a depressed market, fresh funds are actually coming in. In June, ARK got over $180 million in inflows, according to Faqts. Our clients have been diversifying away from broad-based benchmarks like the NASDAQ 100, which is why I believe inflows are occurring. Wood stated, "Our entire focus is on disruptive innovation. Innovation finds solutions to issues." This year, major U.S. stock indexes have also declined. By Tuesday, the Dow Jones Industrial Average (DJIA) had down almost 10%. The S&P 500 (SPX) had fallen 13.5%, and the NASDAQ Composite Comp had fallen more than 20% this year. Wood anticipates that inflation will level down in the upcoming months, even though the July CPI data may be flat, slightly up, or slightly down. Many people were shocked to see that the price of gold GCOO peaked in August 2020, despite the fact that it has been a fantastic leading indicator of inflation throughout her lifetime. Wood also brought up the recent declines in energy costs, copper prices, HGO, and oil prices, CL. She added that as businesses work to get rid of their blown-out inventory, prices may drop in the upcoming months. Wood links the recent decline in the Adobe Digital Price Index, which tracks e-commerce in the United States, to the inventory overhang that businesses are currently trying to address. According to Wood, innovation, especially that which is made possible by technology, is deflationary, but it's positive deflation. Fed Chairman Jerome Powell disagrees with Wood's assessment of the U.S. economy, saying in June that he does not believe the country is in a recession. Powell and the Fed, however, are mostly focused on inflationary data, like CPI, and lagging indicators like the labor market. This suggests that the Fed is unlikely to identify a recession until it has already taken place, according to Wood. Instead, Wood bases her forecast that the economy would continue to deteriorate and that inflationary pressures will subside on the most recent economic statistics, Wood stated. I do think we're going to see some significant disappointment in the employment numbers going forward, because if you look at initial unemployment insurance claims, they're up 50% from the low. Additionally, copper prices have dropped sharply, which is also an indication of economic activity. And gold prices peaked in 2020, which is a major indicator of inflation. These are all indications that inflation will decline. It will drop sharply, and there will likely be some deflation. Wood predicted. Wood claims that the flagship fund of ARK Invest has bottomed out, which may pave the way for a respectable future rebound. According to Wood, growth stocks are the new leadership and will typically outperform as we move towards the end of a bear market and the end of a recession. According to our flagship strategy, it appears like we bottomed out intraday on May 12. About a month before the NASDAQ 100 and S&P 500 hit their lowest points of the year. ARK's flagship fund hit its bottom. That's a first sign that we may be making progress in this direction, Wood stated. For investors in ARK Invest, that would be fantastic news because their flagship fund has dropped over 70% from its peak in February 2021. Wood might not be done yet, though since a few weeks ago, earnings and SEC investigations caused significant declines in some of her best-performing stocks, such as Coinbase, Teladoc, and Roku. However, what about Tesla? Do you have any predictions for Tesla? Tell us in the space provided for comments below. I also appreciate you viewing. Click on one of the two videos on your screen while you're still here. I'll see you there.